Welcome to another episode of Catalyst, where we share inspiring stories of individuals who've made their mark in the mutual fund distribution industry. Today, we have the pleasure of speaking with Mr. Anand K Rathi, a seasoned professional with over 2 decades of experience in wealth management. From his early days in banking to founding Augment Capital Services, Anand's journey has been defined by a strong focus on building trust and providing personalized financial services. His latest venture, MIRA Money, seeks to empower individuals to make informed investment decisions, aiming to create long-term wealth and help people achieve financial freedom. Under Anand's leadership, MIRA Money has surpassed 250 crores in assets under management or AUM as of March 25. What sets his approach apart is his commitment to helping clients build disciplined, long-term portfolios with an emphasis on transparency and simplicity. In this episode, Anand shares his personal journey, insights into the future of wealth management, and the core principles that have guided his success. Tune in to hear how he seeks to navigate the changing landscape of the industry and his insights and thoughts on where it's headed.
Hi, good morning, Anand. Welcome
morning.
to Grow Mutual Fund podcast.
Thank you so much for having me here.
Thanks for being here. So today we have with us Anand K Rathi. Anand has been part of industry for last almost 15 years. He started a company called Augment Wealth. And then in 2022, he started a company called MIRA Money. So all of us know mostly Anand as a part of MIRA Money, but he had a very great stint, with Augment Capital. So Anand, today, first thing that I want to ask, you have been banker, and you have been part of industry for a long time. Where you saw that opportunity in terms of the client expectation and client gap that you felt you should be part of an MFD community?
That's a great question to start off with, Manish. And I actually, when I was a banker, one of the things that I saw was a lot of times we couldn't offer things with the freedom that we wanted to do. Let's say, in spite of the fact that a certain asset was doing well, you, as an investment manager, you're not offering it because there was no freedom for you to offer.
Right.
So the research is where I thought we could do a lot better. And the other thing is, freedom in general, right? You're not constrained because of costs. You're not constrained because someone is helping you with a certain growth and things like that. You could be more client first when you're on your own. And that's one of the reasons why I started out Augment Capital way back in 2010, right after being in the bank for about 7 years.
So it's been almost 15 years, and then you started MIRA Money. Can you share some bit of your journey that you have seen in last 15 years?
So the journey, in short, has been very exciting. A lot of times you feel you're doing a great job, and a lot of times you also wonder what holds ahead for you. But what I've seen is that when you are more and more client focused, the businesses automatically starts growing up. It all started with 2010 when I was not sure where I'll be in the next 1 year, and here we are in 15 years. We have reached a certain milestone. In the next maybe couple of years put together, we'll be at maybe 1,200 odd crores of assets under management. So things have been pretty good, exciting, a lot of learning. A lot of times when you put your ego behind, a lot of times when you go right, you pull yourself down saying don't fly too much. So it's been a mix of all emotions, all journeys, but it's been very fulfilling, especially when you see many of your clients whom you started your relationship off way back in, let's say 2010 or 8 or 7, many of their goals being already accomplished or almost on the verge of getting accomplished, right? So whether it is kids' education, sending their kids abroad, getting into retirement. So
Right.
The journey has been exciting, exhilarating, full of emotions and a lot of learnings.
Can you add something more about MIRA Money? Because that journey started almost 3 years back, So how this transition, what changed after MIRA Money? And what's the meaning of MIRA Money? A lot of us, while we have heard MIRA, we exactly don't know what MIRA stands for.
So MIRA, which is MIRA, stands for Money Invested in Right Assets.
Oh, interesting.
So that's why MIRA Money, and it was coined by my other co-founder.
Oh.
He's actually very good at coining names. So the whole idea with the reason why I started MIRA Money was because, one, I saw that we could scale significantly with technology, and I'm from Bangalore, and Bangalore is known for tech. So it was a lot easier for me to think the tech way. And the second thing that I really saw was there was a clear gap for these young 30 to 40 year young growing adults who had the money, who were very serious about the money, but were not getting the right set of advice for them. Because the money is not big enough for an HNI wealth manager to manage them, and it is not small enough that they could do everything on their own. So they were confused. They used to go to a bank or they used to go to an agent who never used to give them proper financial advice. That's when I thought, okay, why don't I reach out to all these young population who are a little more serious about money and offer them a platform which will help them to grow their money in the right way. And that is where MIRA Money started. And incidentally, my other two co-founders were my own clients.
Okay.
Right. So one was working as a head of Flipkart Search, and the other one was director in Qualcomm. So both of them were my clients. I used to manage their money, and when this idea came in, these two people came to my mind first, and then I spoke to them. I narrated the idea. They had other ideas, so we put it all together, and that's how MIRA Money was formed way back in 2022.
So one interesting thing, if I get to see from this, one, you have defined the gap. Or you have defined the audience that you want to cater. You don't want to cater to everyone. You saw opportunity in certain audience and you felt they are not getting right advice and you want to cater to that particular segment. So you have defined the audience and you have also defined the philosophy that how you want to manage it. So it's either it's complete solution or it's holistic solution, whatever you may call it. But more than that, you also want to use technology as a core of your offering.
Yeah.
So do you think that's important when you're building this kind of business? You have to be very clear in terms of where you want to capture, what kind of business you want to grow, which segment you want to capture, and what kind of belief or philosophy that you want to follow. Is that important in this business?
First of all, philosophy is definitely very important, whether it is a wealth management business via tech or in general as well. Philosophy is extremely important. So for example, my philosophy, if I may take a minute there, is that we believe that, and it's borrowed from my own guru named Howard Marks. Everybody knows him. So we believe that every asset moves in cycles. You know, equity, debt, commodity, currency, real estate. You take any asset, it is never a straight line. It is always a cycle, an upward looking cycle. So the idea is, as an advisor, my role is to make sure that we understand where are we on the cycle and then understand the risks and the rewards it will offer.
Okay.
And if the risk is higher, you tend to pull back a little, and if the reward is higher, you go very big on it. Right. This is a philosophy that we at MIRA Money and Augment follow. Thank you. So the idea there is, don't overpay for a certain asset just because it is looking good or your friend next door is saying. And so it is very important to have a philosophy. And second is target segment. See, today you have only one. A lot of MFD. I've been an MFD without a large team for a very long period. You're doing everything, literally opening the shutters of your office to sometimes cleaning your office, which is not bad at all to do, and then doing the research, picking up clients' calls. Sometimes those days you used to pick up forms as well, right? So you're literally doing everything. And that one car cannot go to different places. So you need to know which is the segment that you want to run behind, whether it is HNI, whether it is super HNI, ultra HNI, or you want to go the retail way. Because then you can position yourself rightly to the customer you want to go for. If you are someone who wants to focus on retail, then the model of application doesn't work. You have to go the digital way.
Right.
If you're focused on super HNI, then a mutual fund alone won't solve for the problem. Yes. You need a lot more different solutions. So without knowing your target segment, it becomes very difficult for you to offer the right kind of a wealth solution to them. And that's why it is important that you choose the right segment and keep yourself focused and build your products and solutions around it. So philosophy and target segments play a key role for us.
I think that's the kind of, we can attribute a lot of success to this clear-cut goals that you have set, either for your investors or for your business matrix. Interesting. I think a lot of distributors should learn from this. Now, if I look at your journey, especially at MIRA Money, if you look at the, let's say, number of families that you manage, number of clients that you manage, and a lot of people that we have seen in our industry, they always have this, let's say, concern in terms of the digital adoption. They think, in our kind of business, when you're managing, let's say, HNI clients, digital might not work, like you mentioned.
Yeah.
But today, you are trying to create a very healthy balance between digital and physical, and that's very, very interesting, point because I think, and all of us know, the role of digital will be more of enablers rather than replacing the physical model. So if you can share some insights, because you have done it, and you have done it so beautifully. So if you can share some insights, how MFD can learn, and kind of they can adopt technology as a part of the growth rather than either as a competition or either as a handicap.
So, in a world where everything is going digital, if you're going to get stuck the old way, I'm sorry to say, maybe we are going the wrong path.
Yes.
Maybe our death is nearby as a business, right? That's primarily because when the customers are evolving, if you're going to be in the Stone Age era, the customer will actually say that, thank you. It was great being with you.
Right.
Abhi aapka time aa gaya for me to change myself. So, it is important to adopt and adapt yourselves to new surroundings. Technology is not bad. If you think technology means someone will come and some AI will come and take your job, absolutely not. Investment is not at all going to be affected majorly by technology. Of course, it will be enabled by technology. See, a lot of people think it is about buying the right funds. Investing is not that. Investing is a lot more psychological than what we all think. And that is where the investment manager's role is very important. So you as an MFD will continue to play a very crucial role. The only thing that you need to do is how conveniently can you do it for him? How can you use technology right from onboarding to managing his portfolio, to reporting, to making sure that the changes that you're recommending to him are also getting implemented. So make technology a part of your lifestyle, then make it like a different, it's a part of your family.
Right.
It's a part of your family. You need to be with it. Because if you're not, then what happens is, one, you're wasting clients' time. Two, you're significantly wasting your own time. Just imagine to fill an application, send it to the client, get it signed, getting it back, sending it to a bank. All those are
It takes so long.
Right? It takes so long. It takes your time, bandwidth. Just imagine during that period of, even if it is 20 minutes for one client. Let's say you do 10 clients, which is 200 minutes. In that 200 minutes, you can spend time with your family, first of all.
Right.
Or do some client acquisition exercise, clients retention exercise, and a lot more than that.
And you have also improved the experience of your clients.
Absolutely, right? So for
that's
him,
the biggest advantage.
Absolutely. Who wants to sign? The other day I had sent something to a client, and he said, I don't remember last signing a check. Right? So it becomes very difficult for clients also. You're putting them into a bit of a trouble by saying, okay, sign this. So net, my point is technology should be used as an adoption tool. It is an enabler. You should adopt it like a family member than thinking like a guy who's shouldn't be a part of your portfolio.
So coming from you, it makes a lot of sense. While we keep on sharing this with our partner, but someone like Anand who has done it for so long, I'm sure it will give a lot of confidence to our partner. Now Anand, you refer to some mentor. You refer to, I think in the past we have heard you read a lot of books. How important for a distributor to get either have mentor who can be part of or torch for your business, and also read books that can influence your decision making. You think this is important part of our business, and how MFD can learn from someone like you who have been actively reading books and kind of following some mentor like Mr. Howard.
So this investing business itself is all about learning. You learn it from a fund manager, you learn a lot from a CIO, you learn a lot from your relationship manager, you can learn from everyone that you want to. And of course, as I was mentioning in the past, that we have our own investment philosophy, which has been derived from learning from books itself. The reason why I follow Howard Marks and not maybe Mr. Warren Buffett, with all due respect, is because I could connect with the thought there, right? Similarly, when you read a lot, one of them you will stick to. And that will help you to build your business around it. Today, unfortunately, at least when I started, there were not many extremely successful MFDs.
Right.
You had to lean towards the West, which is US, UK, to figure out how successful MFDs are, or successful financial advisors have been building their businesses. Today, there are many examples.
In India itself.
In India itself. There are multiple podcasts, there are multiple streams available for you to learn, and that is what I would request our
that's very basic idea of this show.
Absolutely, and they should focus a lot, and I think this is a great idea, because learning it from someone who has done it in the past is a lot more important than just reading it.
Right.
So what I'm trying to say is figure out if there is an investment philosophy out there in the West that you can stick to. In locally itself, there are many successful guys. Start focusing on them. Read a lot as much as possible. I mean, today I'm reading 0 to 1 by Peter Thiel, and I mean I'll keep reading a lot more for sure. And do not ignore fund manager meetings just because you seem to know you know.
Right.
There are like I was there last week on a Friday at some event. The fund manager gave one line which was very different, and it came absolutely off track. Right. For all you know, you could end up leading or learning something from them itself. So net, this business is all about learning new things. Whether you do it the digital way, physical way, or follow a guru, I think you should do it.
I'll take leaf from your last point wherein you mentioned that this business is not about offering the best funds or right product. It's about managing the emotions or the customers' behavior. A lot of times when we meet a lot of distributors, they still think that we are offering best product and that's what they are supposed to do. How you think we can help MFD to understand that our job is more about managing emotions, more about managing behavior. Product is something that's probably none of us know which product is good or bad. So how important that is for your business and how you can help our MFD to kind of understand that part.
So in my earlier days when I started my business in 2010, I used to write my designation as investor manager.
Okay.
Which talks the importance of behavior. Agar I can control the emotion of my investor, my 90% of my job is done.
Oh, really?
Because every day, today there is a war, yesterday it was Trump tariff. Right. Every year we have some problem. Every month we will have some issue which equity market is concerned about.
Right.
Every year RBI will have some problem which they will be concerned about with the debt product. So there is a concern everywhere. But there is also a solution which is long term, which is multiple medium terms. Right? We know that there is a solution. But during this phase of up and down, if I can manage Mr. Client's emotions well, if he starts flying too much saying, oh, I made 60% return, next year is another 60%, you need to pull him back. You have to have the ability to pull him down saying, don't expect too much from here. And on the other side, when he's down, deep down in the dumps saying, everything is gone, markets are down, I'm hearing someone saying 18,000 Nifty, 15,000 Nifty, you have to pull him up. So if you can manage the emotion of the person very well, I think 90% of your job is easily done, and that's what we do, right? And funnily, that investor manager was something that a lot of my clients liked. Today, I'll tell you a live example. When I started in 2010, the number of clients that used to call me for a percentage fall or a 2% fall in the markets were maybe 50%. 2020 happened. Everybody knows what really happened, and in about 15 days, we were down 30-35%.
Right.
The number of the clients that called me was 3 out of 80. Right, which is less than 5%.
5%.
From a 50%, if I'm able to get the number down to 5%, and I'm sorry that those 3 people also called, but they called me for a different reason. But the whole point is, if you could promote your clients from being very, very panicky and not worried even after a 30% fall, I think you have done a great job.
Great job. So you attribute this to your managing the emotion part better than, let's say, many other MFD, because typically, when encounter a lot of MFD, they keep on telling us, boss, market gira aur mujhe itne calls aa rahe hain, I'm so busy, I'm getting so many calls. And so today you're trying to give this very empirical data in terms of that number of clients who called you in the worst fall that probably one could have imagined.
Absolutely.
Is less than 5%.
Less than.
Interesting.
So, that is because clients have also seen it. Clients also say, acha, theek hai, this will also pass. And this is not that, okay, you can't keep saying this will pass and it never passes. It also comes from the confidence that you build around the portfolio that you bring in. You are not suggesting only equity. You're not only suggesting debt. You're suggesting a mix of products, making sure that the product has lower risks, right returns. We are more in the business of risk management than return generation. Right. So all that will help you to manage the behavior better. And especially during downtimes, if you're more communicative, it helps.
One common feedback that I get from a lot of MFDs, now that digital, has taken over, a lot of investors have come through DIY platforms, So they feel threatened. They feel कि बस मेरा growth क्या होगा? Customers तो platform पे जा रहे हैं. Do you really think DIY or direct is such a big competition to distributor, or it's a complement to our business? How do you say this?
Funnily, from your own group company,
Yes.
we believe they are going to be great feeder for my business. Why? Because a lot of DIY investors, they will try a lot.
Yes.
Some will be successful, some may not be very successful with investing. And as we speak in the morning, while I was coming to your office, I was speaking to one similar client. He has been trying a lot, right from a simple investing to stock tips to FNO to everything. And he's not been very successful, unfortunately. And he says, Anand, I have some money now. Somebody referred me MIRA Money. Can you please tell me if you could help us manage it? So what I strongly believe is that many of these digital platforms are going to be a great feeder for wealth management. Because as the money grows, there are two things that are going to happen, or maybe three things that can happen. One is the client will get busier, his family will grow, and he will seek out professional advice. Because DIY can only reach you up to here. The day you see a 5, 10, 15% fall in your portfolio, he will be like, no, I don't want to do this. Can I go and approach someone? It's like fever versus a heart surgery.
Right.
जब तक आपके पास आपको fever है, you will say, okay, I'll pop a Dolo and 650 and all that stuff. But the moment you have something more crucial, more critical, you are going to a specialist.
Right.
And that is our role. And that's why I believe that the role of distributors will become even more important, and they should be well prepared to get the tsunami of customers that they're going to get. Because of the activities a lot of these stock brokers are especially doing with financial education, getting them onboarded, giving them a flavor of investing, that is going to be great for our business.
So I think one of the biggest, learning for me at least, because I keep on saying to all the partners, it was all the platforms, the kind of customers they have brought in the industry is the biggest opportunity for our MFD partners, and you strongly advocate the same thing. So I'm so happy to have that kind of clarity from you, because that gives us a lot of confidence that we are in the right business. Now, when we are talking about change of behavior that you started, investor behavior is changing.
Yeah.
They are looking at technology, they want convenience. In that process, when I look at a lot of MFDs who have been part of industry for a long time, they have still been kind of grappling with what to change, how to change. And I'm sure you have been a new age distributor. So if you can give some insights, for a distributors who have been part of industry for a long time, now if they have to grow their business, how they need to look at this business from a different optics, because they need to change. Because investors are changing. They want slightly better experience, they want convenience, they want control.
Yeah.
At the same time, they want someone like you to guide them, help them, So what have changed in last, let's say few years post-COVID, and how you can guide them in terms of 1, 2, 3 things they must do in order to remain relevant and probably grow faster?
That's a good question, and I was putting in a lot of thought before I started MIRA Money, right? So one of the things that I wanted to do was only focus on something that I'm good at, which is growth. I could acquire clients, I could manage them very well, but then maybe I was faltering a bit when I couldn't expand, because for you to manage these set of clients, I needed someone to focus on them all the time, right? And because if you want to expand, which means the focus will go off.
Yes.
So I can focus on 75 people, maybe 80 people. But if you want to go to 200, everyone wants to grow.
Right.
Everyone wants to have large AUMs. But if you want to grow from 80 to 200, you need to expand your team. Team expansion is not just about putting body behind relationships. You need to clear-cut have roles defined for them. One of the things that I thought will work beautifully for me, incidentally it has worked out okay also, is that I will bring in a pure research-driven firm. Or when I was visualizing MIRA Money with my other co-founders, we were very clear that the firm is going to be research-driven.
Okay.
Even if one person goes off, it will not be a cog in the wheel. It will be a spinning wheel all the time, and research will drive our decisions.
Okay.
So we hired a great investment head. We hired a couple of great research analysts, because those guys were doing all the job that I was doing earlier. Talking to investment managers, talking to fund managers, understanding updates on funds, and everything was done by them. And they were also managing portfolios closely. This definitely helped me to move from 80 to 200 because I know at the back of my, in my clients, there is a person or set of people managing their portfolio. That is something that I did. Maybe the thing that another MFD may want to focus is he's running around too much, doing a lot of talking. He may want to take off his service and give it to somebody who will become a head of service. Because today service plays a very important role, especially when it comes to HNIs. And if you don't have a service head, and if you're going to do the call, she's going to call or he's going to call you saying, I want this statement. If you're not going to do that, right, he will feel bad. So you better have a service head. It's something that can work more of a back office. Third, I had a CTO, who's my other co-founder. But that was more because I wanted to be a tech-first platform. But for a lot of people, you don't need to have a CTO.
Right.
Maybe you need a CIO, maybe you need a head of service. Maybe you need someone who can take care of the entire back office.
So if I have to put it in one word, it's more like you're bringing the corporate culture as a part of business, wherein you have got different team to take care of their core job rather than having one member team. Typically, that's been the biggest challenge for a lot of MFD because they do everything starting from sending forms to sending statements, and that's where I think a lot of debate that we have seen in the industry for last few years now, that we need to have kind of corporate culture that you need to bring, get right people, add right talent, and then grow your business.
See, if you want to beat corporate or be like a corporate AUM, then you better be like a corporate itself. You can start thinking like a corporate, and maybe that is where my stint with banks helped. Because there we had clearly defined roles. Okay, this guy will only do research, this guy will only do backend, this guy will only do client acquisition and client management. Maybe that is where I am learning it from, and that's what the practice today I have. Maybe that is the foundation of it.
Now, anything that comes to your mind, while a lot of DIO investors, they today are looking for distributors, they want someone to meet and get advice, especially when they evolve from, let's say, certain AUM to slightly more assets, or when market falls.
Yeah.
So a lot of investors, when market corrects, they need to go to someone because they can't manage their emotion. What are the things that typically distributor can practice in their business to kind of give better advice to such investors? Have you encountered such issue in your own business?
So one of the gaps that I've seen when a lot of these DIY investors come in is that they do not know investments beyond equity.
Right.
So having products that can help them reduce their risk in their portfolio definitely helps. For them, for most of the DIY investors, investing means equity investing, returns means 20-30%. You need to tell them the story of portfolio diversification, how it really helps you to generate wealth over the longer period of time, and you need to have equipment which is debt equipment, maybe ultra low risk equipment, so that they can reduce their portfolio risk. That is something that you need to share with all of these DIY investors who are coming out of panic to you. That is something that has worked well for us, and for a different set of people whom you are not able to crack. Let's say there's a guy who knows everything, equity, debt, commodity. Maybe having a different solution which he has never heard of. For example, offering him a private equity venture capital fund may also that may also end up helping. So it depends on the client, but majorly I've seen debt works very well.
Good insights. I think this is something which a lot of distributors are still kind of trying to figure out, and I'm sure your input will be of great help. My next thing, if you can give one advice to our partners, how they can grow business, today in this environment. And while it might look repetitive, but I'm just trying to think it differently. A lot of distributors, they used to go and engage, with clients, spend a lot of time. Now, if I look at young gen, new Gen Z, we might call them, they don't have time to come and meet you. They don't want to listen to all your gyan, market gyan. How can you manage them better? That's one area I think that can really help them in the growth of their business, because largely I think now a lot of Gen Z investors are coming and they want a different kind of advice or different kind of solution compared to, let's say, old investors who have been part of industry. So anything interesting that comes to your mind which distributors should incorporate as a part of their practice to give better advice to these set of investors?
One of the things that immediately comes to my mind is that there is information overload today. If you could percolate the entire set of information into knowledge for the distributor, for the clients, that will work good, because these new clients that are coming in want to know everything, but they still want you to take the call.
Right.
But they are more hands-on, unlike earlier investors. They were very hands-off. Earlier investors, okay, Anand, whatever you're doing, I'll
Yes.
These guys are going to ask you a lot of questions, which is good, because it also means that you are also up to date. But what I'm saying is, the issue is today information overload is so much that they are not able to figure out what should I be concentrating on. If RBI is cutting interest rates, what is it going to lead to? How is it going to impact your portfolio? These are the kind of insights that they're looking at. So if you can summarize it well for him, he will feel a little more in control, or she will feel that, okay, there is a good wealth manager that is managing my money, and he'll continue being with you. The moment you stop communicating enough, even though it doesn't have to be one-on-one, I don't have to come and tell you that, Mr. X, this is what the information is for you. You just send us simple information, but it will work beautifully for him.
What you shared, I call it, so you have to build right content, and then you have to communicate with your investors very frequently.
Yeah.
That's what I keep on telling. So you have really, given, slightly different this thing. But for example, when RBI comes up with some policy, if you create a good content, which can be, shared with your investors, and you can communicate effectively with your investor. Because nowadays, the way of communication have changed.
Yeah.
It's no more the traditional way of, let's say, sending WhatsApp or sending a half an hour video. People don't have time, especially the young audience.
Absolutely.
They'll not listen to half an hour podcast, So that's where I think the content and communication becomes very, very important, in our business today.
Absolutely. The more you communicate correctly, you cannot keep on saying everything every day, but something that is going to have more impact on him. I think that is something that he will appreciate in you, saying that, okay, these guys are more hands-on, working on my portfolio, know what they're doing. And the knowledge levels will, for them, they will be more confident. For you also, it's good, because when you face a client, you will have the confidence of knowing what you're suggesting to him.
Now, let's come to MIRA Money, MIRA Money has been a great success, in 3 years, you have reached a great milestone. Though it's great in terms of first milestone, I think MIRA Money has a long way to go.
Thank you.
But in 3 years to reach 250 crore, it's incredible, Anything that you think you can attribute this success to? And what are the challenges that could have come in the journey, which at least you can share with our partners so that they can, learn, especially younger one, because a lot of people now, a lot of MFDs are now getting into business. They'll learn from this and probably they can implement in their business.
One of the things that has worked well for me is content. We didn't spend money on doing multiple ads about my company and all this stuff. When we started the firm, we wanted to exhibit two things. Because it is about money, the first thing that we wanted to exhibit as a brand was trust. Even if you are the biggest return generator in the world, if I have doubts on you, I will not give you my money. So the trust is the most important thing when it comes to this business. So we wanted to establish trust, and this brand being the most trustworthy brand when it comes to investment management. Second thing is, okay, you're the best or the most trusted brand, but you don't know anything about investing. Then why will I come to you?
Right.
The second thing which I wanted to exhibit as a brand for MIRA Money is knowledge. So today, if you wake any of my team members and ask him middle of the night saying, what does MIRA Money's content stand for? He will very clearly say trust and knowledge.
Wow.
That is something that we wanted to exhibit in every single communication that we want to, when we started projecting it to the investors. And that worked well, because, and it is not going to happen overnight. Building a brand, you know it very well, is going to take a lot of time. So while we started 3 years back, the app went live only about 2.5 years back. And for us to get even the first client was very difficult initially. Who's this trust? Who's this MIRA Money? What is this app? And with scams being so many of them, right? People are worried saying, will we take the money off and run off?
Right.
So all these were, it is very odd for me because I'm coming from a place where I managed hundreds of crores. And
right.
Suddenly today you have to justify even at 10,000 rupees, and it was very difficult to be honest, right? But then the first client came, and the second came, and the fifth came, and today we have thousands of clients using our app, right? Primarily because we could establish ourselves as a trustworthy brand, and we were also exhibiting the right kind of knowledge is what my thing is. So if you're building something, first spend enough time on what your brand stands for, in the digital space especially, because tomorrow, if you're going to do Facebook ads, they should be able to relate to it. If nobody knows you, you spend enough or more or any amount of money, it will not be a success at all. The second thing which I again was very clear is keep your CAC, which is cost of acquisition, as low as possible, or if possible zero. For us it is zero. For others it could be maybe 1,000 rupees, I don't know. But try to keep your CAC as little or as low as possible. So these are the two things that I can tell someone who wants to go the digital way or someone who wants to build a brand in it.
You are talking about you are offering app to all your investors. Unfortunately, when I meet a lot of MFDs, they think if you offer app, you are giving access to your investor, which means they can see the investment and then probably they can redeem. So a lot of MFDs have this, somewhere, they have this, you can say dar that if I offer app, oh my God, my investor will go to, app and probably he'll see the value and nikal jayega. And when I look at you, you are exactly opposite. You offer it to everyone.
Yeah.
You think offering convenience and app is good for the investment community, good for the investors, or it's threat for our business?
See, there'll always be cases where there are investors who will redeem for no reason. There are investors who will see market falling 15% and they would have redeemed at the lowest possible points. That you cannot avoid. Right. When you give them freedom, most of them will stick to your communication. They will understand our thought process. They will respect and they will go through the downturns especially smoothly. But there will always be a case where they will say, no, this is gone, markets are going to go down to the dogs, I am going to exit. But offering them freedom gives them the ability to build in your trust factor.
Right.
Tomorrow, if I don't like Mr. X or MIRA Money, I am okay, I press the button and I'm exiting.
So it relates to your core philosophy. Build trust. Once you have built trust, then probably these things are, byproducts.
Absolutely. And when you see, the whole thing is, you have arrived, if the guy pings you saying, Anand, I want to exit for so and so reason, is that fair? If he does that before exiting, I think you have built a good
achieved your goal.
Right? So you give the freedom is what I would suggest. Don't worry too much about redemptions and all this stuff. It will not happen.
Where you see MIRA Money, say 10 years down the line, I'm sure, while there could be a goal of number and all, that's one part of it. But what kind of change you want to, or impact you want to bring to the large investors today who are facing, let's say lack of right advice or lack of right, guidance from MFD community? What kind of goals you have set for yourself?
Personally, for the company, I see myself becoming a listed company.
Oh, right. That's interesting.
Maybe in the next 5 years, maybe in the next 4 years, depending on how quickly we scale up. That's what MIRA Money is going to be. So tomorrow, you will know my company as a listed company is what my belief is. But I clearly see that investors, the financialization is for real. This is not going to stop.
Right.
The pace may be slower, may not be at the rate at which we saw post-COVID, but the pace will not stop. It will slow down. So you're going to see, as I said earlier also, you're going to be flooded with clients, especially who need quality advice. So I see, especially this 30 to 45 age bracket, maybe 30 to 40 also, or maybe 30 to 45 also, those people having more and more money in their pockets because they have double incomes.
Right.
Someone will have single kids. Most of them will have single kids with the cost of inflation, education and all this stuff. So there is more and more coming in their pockets and they will seek out to good, well-trusted, knowledgeable advisors. And that means that you can impact this maybe about 25 crore people in a significant way. So let's say even if I'm known to those 25 crore people and few of them bank with us, I think my brand would have arrived, is what my belief is.
That brings to the last part of our conversation. A lot of MFDs when I meet, one thing that I'm seeing, challenge so to say, that a lot of MFDs who have spent, let's say, 15 years, 20 years, now they are growing kind of old. Their next gen, their family, they don't want to be part of this business. And since you are kind of kind of young, not very young, but still at least you can, I want to know from you what kind of message you want to give to this young audience, because ideally we all believe in that this is a great business, and you have done it from a banker, you have come and built this great business. So a lot of MFDs, when their son, they are probably, or daughters, they are working somewhere, they don't feel very comfortable leaving that, that comfortable job and kind of joining their business. If you can give one message to these guys, because that's the biggest need for MFD community today,
So, in my view, while the volume will be significantly higher, the issue today is that this selling mutual funds is considered not very attractive.
Yes.
You sell a private equity, it is like, oh wow, but selling a mutual fund is not very attractive. But the thing is, this is going to be, today if it is 65 lakh crore, you can pretty much assume that it is going to be maybe 300, 400, 500 lakh crore at some point in time. And if you're not going to be a part of this, this is still a sunrise segment. It's not a segment which is maturing. It is a segment which is blooming at this point in time. See, I'll tell you my own story. It took me about 12 years to get to 250 crores in my earlier company. It took me about 18 to 24 months to build a 250 crore business. If I can do it, I'm sure if you have the right pillars in place, you will also be able to do it at a much faster pace. If I can do it in 18 to 24 months, probably you can do it in 12 months itself. And the commissions, though are going lesser or maybe little lesser, will not be very poor that you will not be able to afford your incomes and salaries and stuff like that. I think it's a great wealth creation for clients also, and for you as an MFD itself. I see a lot of MFDs having 100 crore plus balances in terms of assets personally. You're getting my point,
right? Yes.
So in the process of building wealth for the client, you yourself are going to get very, very wealthy. Right? When I started, I had 1 crore. My AUM was $1 million. Those days, $1 million was about 7 crores.
6-7 crore, right?
Today, we are closer to about 900 crores. My income is also grown.
Yes.
My lifestyle is also grown. Right? It is not that we are still driving a Maruti 800. We are also driving a luxury car.
Right.
We are also living in a good home. So if it is good, of course, you're all worried about commissions. You don't need to worry because the volumes will compensate for the commissions. So start thinking big. Don't think about 1 crore, 2 crore. Think about 100 crore business for yourself. And that's how, I'm hoping I can inspire a few of my competitors.
So I think you have mentioned 2 things. One, you said 25 crore investors might come, over the next 10-15 years. So India is a large population. So opportunity from investors' point of view, it's pretty large. We have hardly 5.5 crore invested today. And second thing you mentioned, AUM. Today industry is roughly around 70 lakh crore.
Right.
And you are talking about, let's say, 300 lakh crore. So if we look at both the numbers, I think the opportunity for all of us to be very happy, because the opportunity is much larger than what we can see.
Tsunami.
The
simple word is tsunami. One of the things people think is competitive. It is extremely competitive. Businesses are eating up and all that. Kuch nahi hai. Businesses are so much that everybody can eat, and they'll still have many more people waiting in queues to be managed by. I can be very, very sure of it. It is all about, do you as an MFD have the energy to go and acquire more clients? If you're going to be happy with 100 crores, then of course I can't help. But if you want to build it to 1,000 crores, 5,000 crores, then you better build a nice, very important profiles and then start working towards.
So I think the conversation couldn't have ended on a better note than this, that what Anand is saying, that today opportunity for all of us to add many crores and many investors is open. The sky is the limit. If we adapt, if we do things the way things are changing, I'm sure, the growth of industry, and for all of us, there is no limit to it. Absolutely. So thank you, Anand, for sharing so many insights. I'm sure, as we start, sharing this with our partners, they learn so many things from you, and I'm sure they'll kind of grow their business, and that's what we want to do. Absolutely. In this podcast. So thank you very much.
Good luck to all of them.
Thank you so much. Thank you. Pleasure having you. Thank you so much.
Thank you.
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को ध्यान से पढ़ें। म्यूचुअल फंड इन्वेस्टमेंट्स आर सब्जेक्ट टू मार्केट रिस्क्स. Read all scheme related documents carefully.